going on to the AMC traders, what is going on to the AMC investors, and what is going on to the AMC stock group. In today's video, we are finally going to be talking about the $145 option contract and the option chain that expires in the month of August, which is why it is extremely vital and it is crucial that the time that the hedge funds need in order to cover their position. There are just about 5 days left until the beginning of August, and trust me guys, in my opinion, and remember, I am not a financial advisor, but August will be a crazy month. It will be a crazy month because of what everyone is saying, and this exactly aligns with what I was talking about before. So basically, we have a collectivity of the thought, and so now we just need to wait until the month of August. And how is this all being collected into one thought? There are a lot of people in the AMC stock group. We are currently almost 400,000 members strong, and so right now, I'm about to read what this member of the AMC stock group decided to say about how there is no controlled short squeeze. And ultimately, I agree with the majority of what this member had to say. And I'm just going to read it real quick before we talk about the option chain because this is extremely important going into the month of August. So this author says that there actually kind of is, but not what most folks expect. The control aspect is to control or prevent a market crash as an AMC short squeeze takes off. Now, just to quickly pause, what happened when the market had a correction in February? When the market had a correction in February or towards the near end of February, guess which two stocks decided to go completely parabolic and decided to go up exponentially to the upside? Those two stocks were AMC and GameStop. So that is just a quick side note. Now continuing on. It says that the recent action by the Federal Reserve and the SEC will massively boost the AMC share price, massively increase the probability that the grandest short squeeze ever to occur will occur very soon. And so this concept will be greatly increasing the AMC investors' confidence in wealth to be generated from AMC stock, which is probably going to be because of the short squeeze. Now, the powerful people are anticipating that the hedge funds will soon be delivered margin calls. This is exactly what we were talking about before, and thankfully this AMC member decided to just elaborate upon that, right? This is exactly what a lot of us were thinking, and so basically, what do these margin calls really mean? When you have a margin call, that is because you do not have enough money to pay off whatever equity you have. Or just if you have a stock like Apple, right? Apple is a very safe stock, and let's say you also have Google or Microsoft. All of these three stocks and equities are extremely safe, and that is why they're actually called and considered blue chip stocks. However, the market crash that a lot of people are anticipating throughout the month of August, it may be time for these hedge funds to start liquidating their positions. And what does liquidation mean? They're going to have to start selling some positions like Apple, like Microsoft, like Google, simply because they want to protect themselves for the potential market correction or market crash that could happen in August. And what is also going to happen? We know that the hedge funds have a lot of positions in AMC stock because I just brought up the example of Apple, Microsoft, Google, the blue chip stocks, and we know that they have a possibility of liquidating their positions in the blue chip stocks. But what is going to be happening with AMC and how does this all relate? Well, this is exactly how it is going to relate. We know that the hedge funds have a lot of positions against AMC stock. And when I mean against AMC stock, I'm talking about positions that are betting that AMC stock is going to go lower. And when you have positions where AMC stock is to be betted on, that it is going to go lower in share price, you are considered a short seller. And so when you are considered a short seller, you definitely have the possibility of getting something that is called a margin call. Margin calls, especially with these banks, they're trying to do whatever they can to protect themselves. And in my other videos, I talked about this. I talked about JP Morgan, I talked about Wells Fargo. These are just two of the banks that have already started protecting themselves in the month of July so that they are prepared for the month of August. And ultimately, how this is going to work is that if they want to protect themselves, like how a lot of these banks are saying, for example, Charles Schwab, they recently announced that they are not letting some people in their institution allow them to bet against AMC stock or bet against GameStop, or basically one of these Wall Street bet names, simply because they do not want to have a lot of margin. They do not want to lose a lot of money, potentially, if they do decide to bet against a stock that has a lot of retail traders behind them, like AMC stock. So this is exactly the concept that I agreed on with this AMC member, and I'm very glad that they brought it up because I don't think that a lot of people understand that if you do end end up getting a margin call, this is what is going to cause the short squeeze that this author talks about. And this short squeeze, it may not be controlled whatsoever because the month of August is expected to be a very liquidated month, meaning that a lot of people are going to have to sell their position because a lot of stocks may end up falling. Now, no one knows if this is going to start in August, but that is just what a lot of investors are saying because of what the general market conditions are. For example, the S&P 500 is extremely high, and when will it start to have a little bit of consolidation? Or in other words, when will it start to actually decrease so in the future we can start going higher for the general market, right? Because the S&P 500, even though it's an index fund, it cannot go up in share price forever. This is the same thing that happened with AMC stock as well. No matter what stock, there must be a time where it decides to go down in share price. And one quick note before I continue on, with these margin calls, the reason why they are so paralleled with the hedge funds is because if these hedge funds are betting against AMC stock, then the only way that they can end up closing their position is, first of all, their margin call will start to cause a lot of fear, panic, uncertainty for them, right, for the hedge funds. And so therefore, their banks and their leaders will start telling them, you must close it because right now we are not in the best market condition. And so therefore, they're going to have to buy back AMC. And so when all these hedge funds, all these institutions start buying back AMC stock, that is when there is going to be no control whatsoever for the stock to go to the upside. Now, if that's out of the way, let's continue reading because ultimately this was the concept that I agreed with the most throughout this entire article. And so the author even explains, meaning that they will have to cover or buy back AMC stock, causing the share price to rocket. And ultimately, this will result in a large loss for the hedge funds, so large that the Fed and the SEC are anticipating that the hedge funds will need to sell huge quantities of their stocks that they are long on, like Apple, Google, Microsoft, etc., and even Amazon. And this is what we were talking about for the blue chip stocks, to cover their losses on stocks if they decide to bet against AMC and GameStop, and if AMC and GameStop decide to go up, while the blue chip stocks decide to go down. And so this relates to why August is supposedly going to be not the best month for a lot of investors that are invested into a lot of the S&P 500 stocks, because you add inflation, fear of inflation, and actual inflation that has been minimized by the Federal Reserve to avoid panic. It could be really bad. This is another point, right? So we have inflation. This is just a lot of market variables that could add on to why August may be not the best month, as I said just a few seconds ago. And the Federal Reserve right now, they are talking a lot about how they're going to try to control inflation and that it should be no panic whatsoever. But a lot of investors, they're not going to be having no panic whatsoever, and they're actually going to rather have a lot of fear because inflation, they feel like it is going to be a market variable that will cause a lot of problems in the future and conflicts. So therefore, that could be another reason why August could be a bad month for a lot of blue chip stocks and the S&P 500 stocks, but not for AMC. And ultimately, we now have the AMC option strike price, the 145 strike price, and if you add all the other variables that we just talked about, the uncontrollable short squeeze because of the inflation news, because of August just being generally in seasonality not the best month for a lot of investors, and if you add that there could be a lot of margin calls because of the month of August, and because August has a seasonality of underperforming in the market compared to other months, here's why the 145 strike price is extremely important. And I am not saying that AMC stock will go to this strike price by the time it expires. For example, this option chain expires August 20th. August 20th, that is in a few weeks. However, the month of August begins in 5 days. Just because August begins in at least 20 days, right? Just because that is at least 20 days out, I know it's a little bit more, but August, the month starts in just 5 days. And so with August starting in just 5 days, these option chains could actually increase in volume even more. Right now, we have a 100% to a 0% difference in terms of the call options versus the put options. That is why I'm even talking about it in today's video. Last week, it was even more. I just think that the way these option chains work is that they refresh every week. And so therefore, last week was even higher. And this week, it is just a little bit lower. Right now, we have 4,600 call options for the month of August, which does begin in about 5 days. But this option chain expires August 20th. So even if in August, the beginnings of August, AMC stock does not decide to increase a lot in share price, no worries whatsoever, because in August 20th, that is the day that these call options actually expire. And the premiums for these option contracts, they go to roughly $250,000, right? These are worth almost $250,000 worth of premium for the call option, and for the put option, it is worth $50,000 roughly. And what's actually comical about the put options is that put options can be actually bullish. Not every single put option has to necessarily bet that AMC stock is going to go to the downside just so you guys make money. They're actually put options where your position actually makes money if AMC stock also decides to go up in share price. So again, that is why we talked about the $145 strike price in today's video. I will continue to make updates about this option chain because if you guys remember, the last time that we had an option chain with a lot of volume, that was when AMC stock was trading at around $35. When it was trading around $35, there was a high volume for the $70 option contract chain. And where did AMC stock go to? It actually went above $70 to $72 a share in just 1 week. The same week where a lot of volume was there for that same $70 option contract. So with that being said, AMC Stock Group, thanks again for watching. I'll see you guys in the next video.